JP Morgan has come out with a very interesting note on Oberoi Realty. Oberoi Realty, which has bought out the under construction Ritz Carlton Hotel that it was developing under a 50-50 joint venture with its JV partner, that was Sahana Realty. Now what JP Morgan is saying is that the total enterprise value for the hotel is close to 1,040 crore, and the company will most likely need to spend another 100 crore to complete the hotel, resulting in a cost per room as per JP Morgan of close to rupees 50 million. Now what they're saying is that the transaction will result in a net cash outflow of close to 300 crore from Oberoi's balance sheet, and JP Morgan believes that the hotel most likely is expected to start trading beginning from the calendar year of 2022. Now what they're saying is that JP Morgan has made a couple of assumptions. They're saying that they're talking about $275 as the ADR and the 75% occupancy. They believe that with these assumptions the hotel can start generating a gross operating profit of close to 0.8 billion, resulting in a pre-tax return on capital employed of 7% in the second year of its operation. What they're saying is that clearly the hotel investment standalone is unlikely to generate reasonable return. They believe that the benefit of this development is most likely going to accrue on any realization increase that the company can drive on the under construction residential units, where inflation in residential values can compensate for the investment return in the hotel, especially given the fact that the residential project will be a Ritz managed property. Also what they're saying is that Oberoi is looking to scale up its annuity business net operating income by almost 3.5 times to 1,500 crore versus 400 crore in FY20 over the next 4 years via the construction of new office as well as retail assets under and across its under construction developments in Mumbai. Also what JP Morgan is saying is that they are expecting an improvement as far as the pre-sales velocity for Oberoi Realty in Q3 is concerned. They believe that the company most likely is expected to have benefited from the stamp duty reduction in the market. Also what they are saying is that they believe a firmer recovery has taken hold in the Mumbai residential market, and they see Oberoi should be a key beneficiary given its completed inventory as well as marquee developments. Now the other thing that they are saying is that in terms of Oberoi Realty, they believe that Oberoi's cash position and low leverage are something that are key attractions. They believe sales velocity so far has not scaled up significantly, driven by market pressures as well as Oberoi's concentration in higher ticket size units. What they're saying is that the company is currently sitting on very large completed stock, and its ability to monetize this would be key for earnings as well as cash flow. So they have a price target of 430 based on a sum of the parts valuation, where they have valued the residential business on a DCF basis.